It's so cool that we get to work together again. I mean, it's been decades, right? When we first worked together in the past, and it's so weird and fun and cool on how small the world just becomes the older you get. Wouldn't you agree?
Yeah, it really is. First of all, I just want to thank you for having this arranged for us today, and it's so good to see you and to work with you. We go all the way back to Santa Clara County, 20 plus years, and then lo and behold, here
I think it's closer to 30, but whatever.
Yeah, but here we are now. I live in Folsom, and you live down in Lodi.
Yeah. And it's cool because, one of the great things about Big Valley Mortgage is that they're totally embracing like collaboration. And, one of the focuses that you've done as you've gotten older in both years as well as years in the business is that you've focused more on the senior client and on reverse mortgages. And well, I know how those things work. It's not my day-to-day. I'm more on the younger side of things, so it's great that we can collab on those things. I'd like to just kind of ask you a few questions about it,
Sure.
some for my own knowledge, some for the audience that's listening in. And, there's just so many ways that you can do a reverse these days, but can you start off with just like the basic one, the FHA version, like how old you have to be and things like
Sure.
that?
Yeah, absolutely. So, first of all, what is a reverse mortgage? And a reverse mortgage is a mortgage that you can either refinance, take cash out if you wanted to do that, and also use it as a purchase. And the beauty of it is the monthly payment is optional. And so you don't have to have a monthly payment. And that's most people just don't understand that and can't comprehend it. But it can be a wonderful tool, if the client has the right needs for it. The reverse mortgage space is incredibly busy right now.
We got all those baby boomers
well,
that are
right.
now retired.
We're
So
in Bay Area in California, you have properties that have skyrocketed in equity. Then you have a bunch of baby boomers that are getting over 62, the minimum age requirement for reverse. And a lot of them have equity rich but cash flow poor, and so it's a very hot product right now. And we'll talk in a few minutes, but there's different reverse mortgage products that are coming out to even widen that market share.
yeah, that's really cool. And if I remember correctly, I mean, you're the expert. I'm not trying to say that I am, but I know that there's like 4 different things you can do with the reverse mortgage, right? Like you can cancel out your payment, and you can pull money out, and you can have it pay you. Like you can pay your house can pay you a salary.
Yeah.
And then you can always tap into it later on with a line of credit, right? And doesn't that kind of grow? Can you explain that a little bit?
Yeah, it's it's a wonderful tool to have where some of any excess money that you didn't take up front can basically sit and earn today interest rates 8 to 9%. And as the years go on, it's like you had a separate investment account that's really growing at a rapid rate. It's these loans are now becoming more mainstream, and now financial planners are actually starting to use reverse mortgage as part of their retirement strategies, and so they've really become more mainstream. And with the aging demographics we have with the baby boomer generation, there's just a great market for it.
When you say they're using it as their retirement strategy, so someone's not really just painted themselves in a corner and they want to get a reverse mortgage because they either are free and clear and they have a large expense that comes up and they don't have enough income to qualify for. You say there's actually a strategy put together to help them through retirement. Can you elaborate a little bit on that?
One simple example would be, let's say that someone is approaching 62, 63 years old, and they could start taking their Social Security monthly income. But if they waited till they were 67, that amount they'd be getting monthly from Social Security would be a lot higher.
Okay.
And so what's one strategy they're using is that they're calling it, bridging that gap. And at 62, 63, taking a reverse mortgage and paying themselves a stipend every month and not starting their Social Security until they get to be 67. and then the Social Security will be higher.
Oh, that
than it
makes a
would
lot
have
of
been.
sense. Yeah. So this way they get a bigger Social Security check because they're tapping into it later on in life.
Correct.
But yet, depending upon what they did for a living, especially if it's something that's like manual labor or something, your body just gets tired, right? So not only are you retiring, you're tired,
Well,
right? So
and one of the other benefits, from a financial planning standpoint, is if they do a reverse mortgage and take cash out on their property, when they take that cash out, it's not a taxable event.
yeah, true, because they didn't sell anything.
Correct. So it's also a tax hedge.
Yeah, no, that's great. Yeah, because when you're taking Social Security, I mean, sometimes it's taxable, sometimes it's not. Not that we want to give tax advice on this quick little podcast thing here, because we leave that to the tax experts. But of course, since we've been in the business for so long and we deal with incomes, we have to be aware of these things. So it's always good to be able to give those tips, and that's why we work very closely with CPAs and as well as the retirement specialists as well. So
Well, and one area that I've had some success in is working with realtors to help educate them on how they can perhaps get listings and buyer side transactions by focusing on the reverse mortgage with their previous clientele. If I could just give one quick example of how a realtor could, actually pick up a listing and then turn around and help the buy side. All we need to do is go through our databases and look at those clients that have a very low or no mortgage balance, and then approach them with a good script. And a lot of older seniors would move out of that house that they've been in for 20 or 30 years, that they just don't think they can qualify to do it. And the reverse mortgage loans are more flexible for qualifying. And on top of that, they can take that cash out and do some remarkable things. So the realtor can get the listing, and then turn around. Let's say that they live in San Jose and they just sold their property in San Jose and they walked away with $500,000 in net proceeds.
more than that these days, but go on.
Just for the sake of example, $500,000 proceeds, and they decide to move up to the Roseville area into a retirement community, and the sales price of the new place is $500,000. Most of the time, what people do today is put all of that $500,000 of the net proceeds they had all into the new house and pay all cash.
Mm-hmm.
Instead of doing that, they could just put $250,000 down on the house, get a reverse mortgage for the other $250,000, keep the other $250,000 that they didn't spend, and keep that in their savings account for retirement.
Sure.
And now they have a $250,000 loan, a $500,000 house up in Roseville, but they don't have any mortgage payment on that $250,000.
Yeah, they get $750 in assets rather than just having the $500 in assets.
Right.
And on that $250,000, they'd have compounding interest. And on the $500,000, they'd have compounding in regards to the house going up in value, even though, it'd be deteriorated a little bit by the lack of payment.
Correct.
But when we figure things out, especially if you're doing like half down, I mean, I'm sure your equity is outpacing what the growth of your loan is if you're not making payments.
And when that realtor is speaking with the client, they can ask them those basic questions. Would you like to be living closer to your family? Would you like to be in a single-story home? Would you like to have a newer property? And for a lot of people, it's yes, yes, yes. But they didn't know that they could possibly qualify for a loan.
Yeah, I mean, even look at yourself. We were talking before we even started. I mean, you used to be down in Silicon Valley. Mm-hmm. Now you're up in the Roseville, Folsom area, and you did that because of family, right? Like the traditional story.
That's true.
Why don't you go ahead and tell us about that real quick?
Yeah, sure. Our oldest daughter lives up in Lake Tahoe, North Shore, Kings Beach area, and she's been up there over 10 years, married, and they had their first baby. And it happened to be my wife and I's first grandchild. And we lived in Morgan Hill for 25 years, and it's about a 4-hour drive from Morgan Hill to
without traffic.
Yeah, to North Beach, Kings Beach up in the North Shore. And my wife wasn't having any of it. We had to get closer, or I probably wouldn't stay married. So,
right.
So we came up.
Now you're still married, and you get to see the grandchild, and of course,
and it only takes about 2
kids.
hours to get to Kings Beach.
Yeah, and I think that's a familiar story, especially when you have the roots in Silicon Valley, like we both do. The greater Bay Area, as far as that goes, where the housing prices. I mean, I do the statistics down there all the time in the greater San Jose area for single family house. The average single family house is over $2 million these days, and to have a child have to come up with the down payment for that and the monthly payment takes a lot. So they move further away.
It's really shocking. I have some friends, lifetime friends that live in Blossom Valley, and I helped them get into their property, 20, 25 years ago, $400,000 or $500,000 for a tract house in Blossom Valley.
Yeah.
Now that same house is worth $1.5 million.
Yeah, I know. Crazy.
And I can look in Sacramento and find a house for $500,000-$600,000 that's the same as his.
Right.
And so that's why, a lot of people continue to move up to the Sacramento area. It's just more affordable, and more people in the Bay Area continue to age and retire. And
well, here's the cool thing, because if they love that house and maybe they didn't have children, or their children were very successful and they could stay there, but they run into something, they go, okay, your example was, hey, I bought my place for $400,000, it's now worth $1.5 million. I'd have capital gains, not to do the tax thing again, but I'd have capital gains I need to worry about. Maybe I can stay in place and have my house pay me with the reverse.
That's exactly right.
So, you have to be 62, but you had said there's some other products too, right? Like I know that the way they call them jumbo, right? It's called a jumbo reverse mortgage. And it doesn't have to do with the size of the loan. It has to do with who's backing it, right? It's not backed by FHA. Explain that a little bit, because then they have different age requirements on theirs.
Well, actually, what happens, first of all, 5-10 years ago, there wasn't any jumbo product out there for reverse mortgages. And so, and luckily over the last few years, investors have come into this space, and now there are jumbo loan products. So once you get above the conforming and maximum loan amounts, you get into the jumbo categories, and now there are jumbo reverse mortgages available, and they do have some different characteristics than the traditional reverse mortgage. The mortgage insurance premium, or the PMI, if you will, is much more affordable on a jumbo loan.
Oh, cool.
In many cases, it doesn't exist, whereas on a typical reverse mortgage, one of the highest expenses is the mortgage insurance premium, which could be around $20,000. It gets rolled into the loan amount.
But they roll it in, so it takes the sting out of it a little bit. It exists, but at least take the sting out of it.
Yeah.
What are the age requirements on the jumbo ones?
Jumbo ones are lower. They're closer to 55 instead of...
Hey, that's me. I'm 55. I'll be 56 coming up real soon here. So I'm just tired. I'm not retired yet. But hey, that's good to know that I've got that. I don't have to wait all the way till what?
Well, and
62,
it's kind of,
you said?
working in the reverse market it's fun for me too, because I just turned 62, and when I meet with seniors and talk to them, I can relate to them a little bit differently than I can the 25-year-old AI individual.
Right.
So it's a good market for me as I got older and still stay in the business.
Hey, you and I were talking the other day. We had a client that the reverse wasn't quite right, but they didn't want to sell. And, they had a really great interest rate on their first. Didn't you say that they're starting to come out with some stuff that you can maintain your existing low interest rate first mortgage, and now they got a second that's going to be in reverse?
It's really exciting, Dave. I mean, that's one of the more exciting products that came out this year in January. And so we have a whole generation of people that are locked into these 2.5% to 3.5% first mortgages, from that 2022 era where rates were subsidized, by the government to help get us through
COVID and all that.
Yes.
Yeah.
And as we all know, from real estate agents, to ourselves, talking to clients that have that first mortgage at 2.5%, 3%, you can't pry their cold hands off that mortgage no matter what.
Yeah.
Now, 5 years has gone by, so they might have needed a car. They might have a loan
Roof,
for that.
maybe.
They might have had expenses on the house. They might have charged up some credit cards, paid for a wedding. And all of a sudden now they can get a second mortgage, knock off any of that debt, keep that first mortgage in place at 2.5%, 3%, and all that debt gets consolidated and paid off, and they don't have to make a monthly payment.
Yeah.
And
Yeah, so like they have credit cards, or if they got an auto loan, or maybe they even helped out children or grandchildren with a student loan, which were in forbearance for a long time too.
Well, in the conversation with the realtor community is they can also take money out of their house on that second and help one of their children buy a home.
Oh, hey, yeah, that's great.
And that, once again, that money that they get out is not taxable.
Right, because it's not a taxable event. You didn't sell anything.
Correct.
You're just tapping into your equity.
Yeah. So it's a wonderful product, and we're trying to make good use of it.
That's awesome. Hey, one of the great things about working over at Big Valley Mortgages is that I get to collaborate with you on stuff. And here's the cool thing, sometimes people always look to their advisors, and maybe I'm that advisor, but as you could tell when we're talking about things, you're way more qualified under the reverse space. I know enough just to fumble around in the dark. So here's the great news is that if we did have a client who wanted to know more, they can contact me, and then we can tag team it, so to speak, right? Like we can work on it together, and you can do like all the technical part, and I can just paint the big picture and kind of hand it off to you, right? And I know we've done that with a couple of clients so far.
Yeah, it's a great relationship, and I still try to keep you as the primary focus. You're their lifetime lender, and I'm just another a tool, if you will,
right.
that you have at your
sense.
Disposal that you can take out and use when appropriate, just like if you have a construction lender.
Right.
Or
we got all those divisions here at Big Valley. It's great.
Commercial lender.
Right.
You're the Swiss Army knife.
Right. It's great to have everything in your tool belt, right? Like we have the collaboration for reverse with you, which is fantastic, and the rehab loans or commercial loans where it's not your day-to-day that you do. So it's awesome to have a expert like you as part of our arsenal of ways that we can help out not only our realtor clients, but the end user, the actual homeowner as well. So, hey, I really appreciate you taking a few minutes carved out today to discuss and kind of go in length about that. And if we wanted to learn more, of course, people can get a hold of me, but how do they get a hold of you? What's your phone number, or what's the best way to contact you? Do they find you on social, or give you a phone call, or what?
Yeah, they can find me on social, or of course, then we could always reach out at my phone as well, which is 408-891-4295.
I couldn't write it that fast. Can you slow that down a little bit?
408-891-4295. But you can always go on the Big Valley site and find me there as a loan officer.
Right, we're all on there.
Yeah,
we got our smiling mugs on there.
Yeah.
Hey, Brendan, I really appreciate your time today. I know you're a busy guy, and I just really wanted to thank you for exploring the whole reverse world and letting us know a little bit more. And if anybody out there's got questions on them, feel free to fire them. We'll do another session, whether it's one-on-one or record another one of these. So thank you for watching all the way to the end, and I hope everybody out there has a great day.
Thank you, Dave. Too kind.
Bye now.